Inflation has caused massive speculation in the markets, and investors are anxious to protect their investments. With stock prices plummeting and some investors panicking with massive sell-offs, some of you may wonder if there is a way to survive inflation and possibly even profit from it. Lucky for you, Warren Buffett, CEO of Berkshire Hathaway, has seen inflationary periods before and is very knowledgeable when it comes to turning a profit from it. He has profited significantly from inflationary periods in the economy, and he has advice that could be worth a lot to investors, literally. Make sure you stick around as we hear Warren Buffett's advice on how to survive and profit from inflation. Thanks for supporting our channel. Let's dive right into the video. Some positive information has emerged. However, despite the fact that US inflation has decreased from the previous month's 9.1% to 8.5%, we're not out of the woods yet. The amount is still substantial. In point of fact, if things continue at this pace, the economy will be able to run normally. It all would have been great and good if the Fed and Jerome Powell just paid more attention to inflation instead of downplaying it. This graph shows that inflation has been rising steadily over the past year. The Federal Reserve deliberately withheld information from the public about the impending escalation of inflation. In all fairness, they had an understandable excuse to act in that manner. Because of the worldwide outbreak of COVID, we had to print countless billions of dollars to keep people from returning to their jobs. We used to print huge amounts of dollars. But ever since Russia attacked Ukraine, the virus has mysteriously vanished. Take a look at the total amount of COVID cases. There was a sharp increase just before Russian forces invaded Ukraine, followed by a precipitous decline once they were inside the country. Many have returned to work, and the pandemic is now being treated like any other respiratory illness such as common colds. We surely wouldn't be dealing with such a significant level of inflation if the administration had made the decision to open the borders of the country and put the economy back into business rather than printing billions and billions of dollars. No matter what happened in the past few years, inflation is here now, and we can't stop it. In that case, the key question is how to make money off of inflation. There is no choice but to adjust to the new reality and figure out how to make the most of this situation. There are millions of people with millions of different ideas, but I propose that we listen to the guidance of Warren Buffett, who is widely regarded as the best investor in history. The nation has had crises before, and this one will undoubtedly not be the last one. Having lived for nearly a century, Warren Buffett has experienced many times of price inflation. Let's find out what approach Warren Buffett takes to making money while a significant amount of inflation ravages the market. One of the first and most crucial pieces of guidance that Warren Buffett gives is to specialize in a specific field. I doubt that's the kind of recommendation you were hoping to get. Perhaps you were anticipating advice along the lines of invest here or invest there. But the reality is that the majority of individuals lack the financial resources necessary to make investments that will bring in millions of dollars to their accounts. However, here is something that the majority of people are often skilled at doing: exchanging their time for cash. For as long as anyone can remember, that's the way things have been done. A world where your time equals money is really an ideal one. Your time is the only thing you completely control. The greatest approach to protect your purchasing power against inflation is to become an expert in a field of your choosing, whether it be medicine, computer science, or anything else. The need for fundamental skills will always exist, regardless of the type of crisis we are experiencing. A rise in healthcare costs will not force people to suddenly quit going to the doctor. No matter how much it costs, consumers will still go to doctors. Individuals with specialized knowledge and abilities are able to increase their rates during times of high inflation without significantly decreasing their customer base. However, if you plan on increasing your rates, make sure you do it a few months before inflation sets in. Consequently, if you wish to be prepared for a future period of inflation, you should consider making an investment in yourself, in your capabilities, and in becoming an expert in your field. Pursue excellence in your chosen profession, whether that's medicine, programming, or sales. Following that, Warren Buffett offers the following advice. He thinks that the second best form of financial security during inflation is a strong and well-founded business. If a business is in a strong position, it means that consumers are willing to pay more for its commodities, despite the fact that production costs have gone up. While inflation is certainly undesirable, it is unfortunately inevitable given the nature of world economics. No matter how you feel about it, it will still happen. Another undeniable truth is that not every company has a chance of making it through inflation. Many companies will go bankrupt if they raise prices to compensate for inflation, and many more will see their revenues decline if they do nothing. So, which industries have the ability to weather inflation? Buffett may have put it all in the clearest possible terms in a message to Berkshire Hathaway's shareholders in 1981, stating that businesses that are likely to weather inflationary conditions must possess two qualities. First, the freedom to raise prices relatively freely in the face of stagnant demand and slow production without suffering a dramatic drop in customer base or amount of units. Second, the capacity to manage significant monetary volume expansions in the company's operations. This is often brought about by inflation rather than actual growth. In essence, he is arguing that a company supplying a basic good, such as food, can raise its pricing without having any effect on consumer behavior. Additionally, the company doesn't require additional, sizable capital investments in order to expand or change with the times. As an illustration, if you're starting an energy company, you'll need a lot of money upfront to make power plants. However, if your company operates online like Facebook, the addition of a new customer won't incur any additional expenses. Meta won't be charged anything for an additional user. Meta doesn't need to significantly upgrade their system to accommodate even 1 million more users. So, in light of the present inflation, we'd like to know which companies Buffett has chosen to back. Buffett did not disclose every purchase he made, but he did note a few standouts, such as increasing Berkshire's holding in the energy company Chevron to $26 billion from $4.5 billion at the start of the year, making it one of the firm's 4 largest holdings. Prices are on the rise for the same reasons we've discussed before, but it won't stop people from purchasing fuel. No matter how high the price gets, the demand will never stop growing. After all is said and done, the rise in oil costs will have an impact on the other goods in the market. Those prices will eventually be passed on to consumers. Companies like Meta are the ones that have made technology an absolute requirement in today's world. Although the current issue on inflation is unprecedented in scale, it will not drive users to abandon social media sites like Facebook and Instagram. The world economy cannot function without the internet and social media. Whole industries have been established because of them. Even if sales of real estate decline, social media usage is likely to continue unchanged. Nobody is giving up their online persona anytime soon. Because of the new normal created by technology, Buffett invests in several tech firms even though he generally steers clear of them, and his decisions have proven to be very profitable. However, regardless if you have this insight from Warren Buffett, you are unable to change anything. How likely is it that you'll choose a reliable tech firm? While these are certainly positive traits to look for in a business, You should still review their financial information to ensure that they have adequate funds and are not overburdened with loans. They make a lot of money. It's clear that bankruptcy is not imminent. The business is led by a knowledgeable and forward-thinking management team, and its board of directors is equally as impressive. All of these factors should be considered to ensure that the firm you're putting your money into is a good bet. This, however, is beyond the abilities of the vast majority of investors. This is not meant as an offense. Rather, it reflects the reality that everyone is too preoccupied with perfecting themselves and have no time to analyze every aspect of a business. There aren't many opportunities for the average person to learn about investing and become good at it. Because of this, Buffett is here to share some words of wisdom with everyone. He suggests that the S&P 500 index fund is a safe bet for investors because he does not believe the average individual can successfully choose individual stocks. There is sufficient evidence to support the notion that the S&P 500 index has generated above average profits over the course of its entire history. It has surpassed the majority of hedge funds and has shown to be an excellent investment strategy. You will, however, need to exercise a great deal of patience, because over the course of a short period of time, the S&P 500 index has generated a poor return. However, historical data shows that the index typically returns around 10% yearly over timeframes of 1 decade or more. If you don't know what you're doing with stocks, it's best to take Warren Buffett's advice rather than blindly investing in stocks. What do you think of Buffett's advice? How do you plan on profiting from this inflationary period? Give us your thoughts in the comments section down below. If you enjoyed this video, give us a like and subscribe, and we'll catch you on the next one.